This is the Financial News Network. I'm Christy Duffy. The Travelers Companies beat third quarter expectations and lifted its full year profit forecast. The insurance company saw modest growth in net written premiums in the quarter. Joining me to discuss is Mark Dwelle of RBC Capital Markets. Mark, how did Travelers' results measure up against your own estimates, and how was company guidance?
Yeah, I think compared to our estimates, they obviously beat on the earnings line. We had expected $1.50, and they came in at $1.81. Some of that came from better than anticipated revenues, but a lot of the upside was really related to how they did on the underwriting side. The underwriting margins in each of their three major business segments was a little bit better than we had expected, and that was really the chief source of the upside.
How did the combined ratio compare versus your estimate?
The overall combined ratio came in at 90.6. We were expecting 95. A portion of that difference was a lower level of catastrophe losses in the quarter than we had anticipated, but a lot of it was just simply in the underlying run rates of their three main operating segments.
In the premium business, how did losses and reserves trend or improve in the September quarter versus prior quarters?
Well, the biggest improvement was in the personal line segment. That's where they do the auto and the homeowners primarily. That business unit produced a 93 combined ratio, 93.1. That was 2 points better than a year ago and was also about 5 points better than we were expecting. Now, some of that upside was the result of lower levels of catastrophe losses in the quarter, but a lot of it was a combination of better efficiency on their claims handling side, generally solid trends in terms of frequency and severity of claims, as well as that's a segment where they have been getting a modest level of pricing increases, which bit by bit contributes to a little bit better profitability as well.
Is TRV your favorite name in property casualty?
It's certainly one that we favor. Our primary theme at this point is to focus on property casualty insurance companies that have a very strong franchise, have a good track record of managing a conservative investment portfolio, and a long-established track record of good reserving practices. The pricing environment and the claims environment in P&C insurance has been challenging and has been weakening for several years. So it's a time more than ever to really focus on quality companies, all of which are trading at pretty attractive valuations. Travelers continues to trade below book value, despite its outstanding franchise. So it's certainly a company that we would recommend to most investors.
And where do you see the stock heading?
Our price target currently stands at $62. We raised it slightly based on the results in the quarter. That target is based upon approximately one times. It's based on approximately one times ending 2011 book value. So a modest expansion in multiple. Kind of reflecting some of the trends that we're seeing on the personal line side of their business. But primarily just continued growth in book value associated with steady operating performance and continued share buybacks by management.
Thanks, Mark. For further updates, make sure to subscribe to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.